And as you go down the curve, we're seeing less aggressive action on 5s, 3s, and 2s. So it's exactly the opposite of what the market's been doing the last month or so, meaning it's been flattening because it's been nervous that the Fed's way behind the curve on actually raising rates. Well, the Fed's not talking about that. So what's happening here makes perfect sense. It's the inflation risk that's going to play out more now in long maturities. So we should actually see some steepening of the curve as the notion of the taper becomes the big subject, even though the markets prior to today wanted the big topic to be rate increases.
As we watch bond yields move, Liz, what would you say to people who ask why we'd see, the 10-year spike, for instance, after the decision today?
Well, I think there wasn't enough of a move in the 10-year ahead of the decision. The other thing that I want to point out here is that I do think the 10-year moves up incrementally as we move through the end of the year, but there's sort of offsetting forces here. So the Treasury is not issuing as many bonds. It's starting to taper off its issuing. So as the Fed sort of stops buying as much, there's also less issuance. So there's going to be some offsetting forces that aren't just a direct reaction of a tapering program. So you shouldn't expect a huge spike in the 10-year. But there are also some intricate things going on in the longer end of the curve, so the 20s and 30s, where you see people kind of betting on volatility in the curve over the near term. And I would expect that yields are volatile as we try to figure out what the Fed's plan is. I also think that December dot plot is going to be an important thing to watch. And when we get into 2022, I think the Fed is going to exercise its option to taper a little bit faster. So some of that is going to be a little bit more difficult for the yield curve to digest than what we heard today.
Michael Kushma, where are you on rate hikes? By some estimates, and we'll see what at least Steve's numbers tell us, but 90% chance now of a rate hike by July?
I think that's
No.
still too high.
No. That's not what I said.
No, not what you said, Steve. That's
Kelly?
that's what's out there on the wire. What are your numbers? I don't know if you can run them that quickly. I know that usually this one's a little more aggressive.
I can run through them quickly. Yes.
Yeah.
Yes, I can. I want to hear the answer to the question you asked that gentleman there. But 53% for July, 65 for September, 81 for November, 86 for December, and 93 for December.
Okay,
that
great.
was the number I was talking was in the 90s there.
Yes, we won't get carried away. There's a few different ways to kind of slice this, but we like yours best. So, Michael Kushma, what would you say about that, about the possible timeline, even if it's just more in the 60% likelihood chance now? Those percentages clearly have moved up on the back of this decision. That makes sense to you?
I think it does, in the sense that the market's thinking about the Fed alongside the trend which has occurred outside the United States. You look at central banks outside the United States, they're all moving more aggressively. First it was New Zealand, then Norway, then the Bank of England, and the UK, now then Canada. Australia backtracked on their policy. Well, everyone's moving to become more hawkish and running a less easy monetary policy. So the price in some risk premium that the Fed will also have to find itself in the same position and have to move sooner than expected, I think is there. Now, it's already moved. The market has already moved a lot relative to where we were 3 months ago, as has been discussed. However, unless they taper faster and finish tapering faster, I think they still want some separation between tapering ending and rate increases. So that if they taper in March, they go really, really fast, maybe June and July is possible. I still think they want to move slowly at that point in time because inflation will be falling significantly. Again, it may be too high from too high a level, but it will be falling. Growth has been very weak in Q3 for very specific, a lot of supply side reasons. But supply side relaxation of supply side constraints may actually further reduce inflation pressures down the road in the summer or spring of next year. So I think they want to leave their options open.
All right, and we will leave the panel at that. Guys, thank you all so much for joining us with instant reaction and analysis to the Fed's decision. Bob Bassani, Rick Santelli, Steve Leisman, David Kelly, Liz Young, and Michael Kushma. Still ahead, our coverage of the Fed decision continues with former Fed Governor Robert Heller. He'll give us his analysis on the taper and what he expects from the Fed chair's presser, which can always change the narrative, sometimes pretty significantly. Jerome Powell takes the podium in just a few minutes. We'll bring it to you as soon as it begins. Keep it right here.